So here's what happened last week, and I guess let's talk about precious metals first before we get into uranium. Gold and silver closed the stock pretty much flat. Silver was down slightly, I guess about 1% or so. But so the gold and silver stocks, though, they got crushed, and it's been like that for a while, right? And nothing unusual. You might think, of course, the metals will be more stable in the downside, but the equities they have more potential to the upside, right? Theoretically, but that may be true. But so far in the last 52 weeks, I haven't really seen that. And why I'm saying this is because gold closed this week about 3% higher than last year in the same period. You know, it beats the heck out of tech stocks, I know, but the GDXJ, on the other hand, is down about 30%. So gold is about break even, up slightly even, but the gold stocks are heavily in the red. So naturally, if you're a gold bug, you might use this to point out how cheap gold stocks are. And you can say that, the underperformance is a great value buying opportunity. And if you're a gold bear, then you might want to use this to show how gold stocks are worthless, even at the same or higher gold price. You might even go as far as to say that the PM stocks are a leading indicator for the whole PM sector, and that therefore the fact that they are underperforming simply means that smart money is the leading indicator. The leading money is leaving the sector, and the sector is about to crash. And if you want to know what I think, well, I do too. But at this stage of my quote unquote career, I don't know what I think because I have no idea what I'm doing. But I did get a chance to ask Lobo Tiggre about what he thinks. Like, is this a positive sign for gold investors? Is this telling us that the value is in gold stocks, or is smart money basically showing us the way on? That's what I asked, and here's what he told me.
If you believe that, then clearly it's time to, if not exit, then lighten your load, take a step back, see what happens. I do not believe that. I do not think the smart money is telling us that gold is heading lower. If I look at the macro picture, and we don't have to spend too much time on that, I think your audience is probably familiar with the main points we would say, but real rates still profoundly negative, entrenched high inflation, stagflation seeming likely. I mean, these things are all very bullish for monetary metals. It's hard to see gold melting down in any big way in this context. So therefore, we have a divergence of price and value. And I don't think price is the leading indicator here. I think those alligators' jaws shut with price catching up to value instead of value dropping down to price. In other words, I think the sellers now are making a mistake. I think there's investor fatigue. People have turned very bearish. We've had bearish sentiment. That's not new. It's been around for a while. And I think it's becoming a bit of a self-fulfilling prophecy. I can tell you, I'm seeing it on my Twitter feed. I'm seeing it in a direct email that people are just sick of it. They're tired of it. Why isn't this working? I'm out. These stocks, they're crap. They don't work. I'm done. I sense panic setting in amongst not gold bugs who are hoarding their bullion, stacking their silver, right? But the speculators on the stocks. I'm sensing incipient panic. And I don't think that's a leading indicator. I think that's emotional. I think we may see a capitulation event, which could create phenomenal buying opportunities for the people who have the discipline to buy the dip, as it were. But it's not a dip. Sorry, one more quick caveat. I think there's also very real potential that the double tightening the Fed is engaged in could actually spark a market crash. And the 20-30% retreats we've seen right now are not the market crash or a market crash. I'm talking 2008 style event. I wouldn't buy anything ahead of that because everything could get much cheaper. But once that's clarified, either it happens and becomes a buying opportunity or it doesn't. This bearish sentiment, I think irrational and excessive bearish sentiment in the gold and silver space is absolutely creating buying opportunities. And I have a shopping list and I have every intention of taking advantage of it.
I think that would depend, though, on the type of company that we're talking about, the specific company that we're talking about, actually, because I mean, it has a lot to do with inflation, with the rising costs of the companies. But at the same time, what else is rising is their cost of capital. I mean, if you have to raise capital into this market, that's hurting the shareholders more
Absolutely.
than the discount is adding value to your purchase, right?
I'm with you, brother. And so for the bigger companies, with your royalty companies, it's much less of a concern. But think about it. If we do get capitulation in the gold bug space, you could have, I don't need to name names. Everybody knows who the top dogs are in that space. You could have them on sale 50% off with nothing wrong with the company, with the gold price actually maintaining their top and mostly their bottom line. The royalties in particular are much more insulated from inflation. They don't have production costs, right? So it would just be throwing the baby out with the bathwater for those, highly profitable royalty plays to sell off with everything else in the gold and silver stock space. And the producers too. We know who's making money. And if they go on sale with the direct who aren't, fantastic buying opportunity. It's a little bit trickier for the juniors or developers. Developers, if they have all the money and they are remaining on budget with their construction plan, then they're okay. If you get behind schedule or budget, behind schedule eventually almost always means behind budget. So that's something to watch out for. Or if they don't have the money yet to finish the mine build, that's a big red flag. And then for your juniors, your explorers, you really want cash in the bank, because you can have a great project, but if they happen to be out of cash now and have to finance, you're looking at massive dilution. And if you're working along and you've got a year or two's cash in the bank, you can just keep right on going. You actually have no operating expense. You're exploring, you got cash in the bank. You just keep right on going right through any kind of market meltdown. It doesn't mean the stock won't go down. It does mean that the better stocks have a better chance of surviving and or recovering more quickly.
That makes a lot. I hope people were listening to exactly that part, because that's very important as to the type of company. Because I could just as easily ask you, you wouldn't tell me, but I could ask you, which company should I be buying? Well, if you follow these, you can pretty much make a checklist of what you just said, and you sort of want that company, right? You want that company that when stock prices are lower, they dig their head in and they're working, they have the cash to be doing the work, and when prices start to, when the sentiment on the stocks starts turning, they have a lot to show for it. They have a lot to show, like the type of work that they did in that period. And that's the type of company that should theoretically outperform, right?
Right. Well, no, not just theoretically. I have experience with it. I've seen it. 2020 was too acute. Like everything came screaming back, at least on the gold side, right? It was such a sharp V shape. But in 2008, it was a wider V. It was still a good sharp V, but the market didn't lift all the gold stocks right away. It basically bottomed in late November. And in the December edition of the International Speculator, the newsletter I used to write for Doug Casey, I had a bunch of best buys in there. And I was going to buy them myself, but we had a rule. I still live by this. I don't buy in front of my readers. I tell them first. And so I had this list of best buys, and like all of those stocks doubled within a few months. But the thing is that I'm telling you here is that this V-shaped bottom, I waited until the readers had a chance to act first. And by the time I was ready to buy, all of them were up. The gold had bottomed, and those best of the best stocks started recovering immediately with gold. A lot of the other ones, the ones that didn't have cash or had other issues, that was a U-shaped bottom until the whole market lifted all ships. But the V-shape affected not just gold and silver, but the stocks of the very, very best of the best companies immediately. No delay whatsoever, immediately. And so when I was ready to buy, they were already up. And I said, the markets had just been doing this series of waterfalls. I said, I'll catch the next fluctuation. No next fluctuation. By the end of the month, they were all like 50% higher or something. And I completely missed the boat on the entire shopping list. I'll never forget that lesson, Antonio.
Well, to people, by the way, who are wondering about your companies and what you're writing, I've become an affiliate of Lobo. I've followed his service now since we last spoke. I like what he's doing. I think it's worth at least that you have an entry level, I believe, at like $50, something along those lines. It's $50. I definitely think it's worth it. I have a link below, so I should suggest you go onto the website and see what works for you, what doesn't. But Lobo, sort of back to that, because we were talking about the sentiment and that V-shaped recovery. What do you think might cause that? Like, what could be the turning catalyst? Would be the Fed, stopping by raising interest, not raising interest rates anymore, or like, what do you think will turn the sentiment around here?
It could be either way. Damned if they do, damned if they don't. like they say, history doesn't repeat, but it rhymes, and it doesn't have to. Just the fact that gold did so well, and silver, in the 1970s because of stagflation, it's a different world now. Actually, it doesn't have to play out that way, but markets are mass psychology. Markets are emotional, and if we get like not just the writing on the wall or the people like us saying, "Oh, look, you got high inflation, recession risk, looks like stagflation." If it becomes not a fear, but a fact, what are people going to look back to? There's one example everybody's already talking about, right? The stagflation of the 1970s. And what happened in the 1970s? Gold went from $35 to $850 or 41, depending on, gold and silver took off, went to the moon, as it were. If that's the model that people have, I think it is reasonable to think that a lot of people will start moving in that direction or wanting to participate in that, whether it has to be that way or not. That's the prediction. On top of that, you've just got this massive amount of insecurity in the world. I mean, the world is still dealing with and recovering from all the COVID lockdowns. And now there's a war, and you can dismiss the war as being something only those Ukrainians have to worry about, for them. But it's not, that's a nonsense way to look at it. It's the economic war that matters. And that is a world war. We're having World War III right now is an economic war, and it's a big deal. I mean, look at Germany right now. I just saw that 60% of Germans are now in favor of keeping their last nuclear power plants on. To my mind, that's like hell just froze over. Germany was the place where the people were so afraid of nuclear power, it was never coming back. And this economic war and Putin turning off the gas spigots has made like the impossible possible. You probably ask me about uranium later, but the point though is just, this is a world awash in fear, and that has to be good for safe haven things. So it can be anything could trigger it, Antonio. It can just be an idea whose time has come. I think of it as being, there's so much right now that is so bullish for monetary metals. It's like one of those super saturated solutions that you played with in chemistry class, and you drop the seed crystal in and poof, the whole thing crystallizes. I think that's the market environment we're in right now. That doesn't mean things can't go lower, especially if I'm right about a market meltdown being likely ahead. Because in that liquidity event, we saw this in 2020 and 2008. But when the markets crash, everything goes on sale, not because you want to sell it, but because your margin clerk is selling it for you. Right. That liquidity crunch. So not saying things can't go down first, but I think the super saturated solution is there waiting for that crystal that could make many of our most avaricious dreams come true on the gold and silver front.
So that basically means that you're not too much concerned with the short-term movements, like you're not paying attention, because what we're seeing in the charts is that we have we're making a lower low. Basically, we're trying to make a lower low, at least with gold and silver on the indices. So is that something you're concerned with or not?
I don't see a significantly lower low. We're still in the $1,800 to $1,900 range. It was close to $1,900 again just a week ago or something like that.
Well, I was mostly referring to the stocks.
No, okay, right. But I'm a fundamentalist, and my thesis, as we discussed before, is that the stocks will catch up. I don't see gold dropping down to the stocks. I see the stocks catching up to gold. Therefore, I am paying attention, and I'm looking at gold and silver, and they're sideways, which sure beats the heck out of mainstream investments, right? So I wouldn't say I'm not paying attention. I would say that I'm not worried. So key point, I haven't sold anything because of a possible market meltdown. I'm invested in the kind of companies that I'm talking about that I think can endure and thrive and come back. So if there's no meltdown, right, and I sold, then I'd be in a world of hurt because I'd get left behind. So I'm still long. And if there's no meltdown, my existing portfolio, I think, will do phenomenally well. If there is a meltdown, I'd buy more of them. And there's another sort of side, kind of two shopping lists, things I'd average down on and things that I missed before. Great speculations in gold, silver, copper, uranium, my favorite metals, right? That I would love to be able to get on sale if I got a chance. So am I worried about a crash? No. Am I looking forward to it? Kind of. I don't want to be guilty of schadenfreude, but there's some great companies that got away from me before. So I can, believe it or not, I would honestly, I would love a chance to buy these stocks on the cheap. So I could celebrate a crash, hopefully not too much schadenfreude there.